Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets.
Ice raw sugar in New York. The past key features here had been and continue to be the late April to late August descending expanding wedge pattern, currently 2146 to right off the bottom of my daily chart, which is highlighted in dark blue on my daily chart. This moved from the original sideways triangle into a descending wedge pattern, and back in late August the market broke out over the upper trend line of this pattern. The move up soon got caught within congestion from early May, late April, and from the bottom end of the March 2012 high at 26.20. This halted the rise, but prices did not turn back down. Rather, the short medium moving average, currently at 26.53, acted as a support at the start of October. And though prices appear to be caught between the March 2012 high at 26.20 and the high of last April at 27.42, they have broken higher. In part, I suspect the weekly key reversal up made from 2 weeks ago prompted this move higher, though this did not show in an immediate move. And it was only last Friday that we had a first close up over the significant congestion at 27.71. I'm now awaiting to see confirmation of this pop upwards. Beyond the 27.71 congestion, we have a small band, 28.27 to 28.36, which contains the October 2011 high at 28.36, which looks quite interesting, resistance. So where does that leave us now? Well, the original confirmed break above and out of the descending expanding wedge pattern gave us a primary target in the 27.25 area, and the secondary target X1 in the 28.75 area. The primary target was reached in mid-September, and so far the market has shown some limited interest in trying up to the secondary target X1 at 28.75. Looking at today, well, the market has so far followed on higher, negating an earlier idea that we might have an August to date base double top, but conversely strengthening an earlier idea, which also is around about the same time, of a smaller October-based ascending wedge pattern, currently 27.38 to 28.45. This is despite a breach lower early last week below this pattern that has subsequently been repaired. I've not highlighted the pattern as yet, but I am seriously considering it. Ice Europe, white sugar in London. The break higher over the upper trend line, currently 687.80 back in late August, of the late May to late August expanding wedge pattern, set the stage for the next move higher. This was a multi-pattern move, as the upper trend line was also the neckline of the late May to late August reverse head and shoulders pattern. This is highlighted in dark blue on my daily chart. Thus, a primary target for the expanding wedge pattern was in the 769 area, with a secondary hard-to-reach target X1 up in the 797.30 area. Meanwhile, the primary target of the reverse head and shoulders pattern was in the 754.20 area, with a secondary hard-to-reach target X3 up in the 784.90 area. As you can see from the daily chart, the primary targets for the descending wedge pattern and the reverse head and shoulders pattern at 754.20 were both reached in September, leaving the secondary target still alive. However, there has been for a while a question mark over these secondary targets, as after reaching the primary targets, the market changed and dropped away in mid-September to early October. Eventually, the climb was halted by a combination of the rising short-medium moving average, currently 726.5, the slowly rising medium moving average, currently 704.20, the original broken trend line, currently at 687.80, and the congestion between about 675 to 700, dating from July to August and again earlier from June. This has been enough to turn prices back up for little mini reverse head and shoulders bottom pattern, and prices have reluctantly and slowly moved higher. I initially thought it might be difficult with the congestion at the April high at 730.5 and the October 2011 high at 735, but they were overcome, and the slow ascent could be seen as an ammunition building exercise for another attempt higher. In the meantime, the action over October going into November has elements of a possible ascending wedge pattern, currently 729.90 to 760.5. I have not highlighted this pattern, not yet, at least, but I do note that today the market has pierced the upper trend line, currently at 760.5, and prices are seemingly taking a close look at the September high at 769.10. So please remember, on this, we still have open targets higher up. Sugar white premium spread. We are in the last quarter of 2023, and this chart continues to be one of the busiest and most colourful of all my charts. Many things are still going on, all at the same time. Okay, so I've previously spoken about two big picture items seen here on this weekly chart. We have the recurring big old bullish Andrews pitchfork from 2019 to 2021, very good one there, highlighted in dark blue on my weekly chart, with the market at the moment in between the lower time below, currently at 117 even, and the middle time above, currently at 191.25. I have said this so many times before, and I will repeat it here yet again. This pitchfork, despite being breached in the past, still continues to show the overall major bullish angle of attack of this market. Next, we have an ascending expanding wedge pattern, highlighted in bright red trend lines and above the current market. This was formed between mid-April to late November last year, currently 213.5 to right off the top of my weekly chart. To me it was, and still is, not the best looking of such wedge patterns, but it is also still out there, despite being tested as recently as mid-April this year. And it comes with all the possibilities such a pattern invokes. Then there is the most recent activity, and this had seen prices around and through on occasion all the moving averages, notably the long moving average currently at 130.75 and the medium moving average currently at 142 even. All were prompted by the change gapping move lower of a few weeks ago. We have seen this activity push prices down through two 50% Fibonacci lines at 128.75 and 131.5, as well as the June 2020 high at 134, and then move back up through all of them as well. We are currently sitting between the very slowly rising short-medium moving average, currently at 142 even, and the Fibonacci and other base congestion between 152.75 and 155, which contains the 2013 high at 152.75. Now, many weeks ago I drew a bullish shift pitchfork for the August 2021 to February 23 action, and I've once again decided not to highlight it. As with so many trend lines here, the action on this pitchfork neither adds nor subtracts from the current picture. Next point is to discuss, well, next point I'd like to discuss, is once again a previously discussed big picture item. It is look once more at the whole of the 2022 to date action as a possible huge lopsided diamond top, out of which prices emerged during the summer. This is the pattern that's highlighted in green on my daily chart. We initially had a false break higher from this pattern, then recently a false break lower, and so far the market has still not decided as to which way this pattern will drive us. Last week I began to have doubts about the whole idea of this, and I can see myself retiring this pattern completely unless we see some productive activity in one or other direction. The final point I'd like to highlight is a question, and the question you can see on my daily chart. It is this: is the actions of the moving averages, specifically the short moving average, the short medium moving average and the medium moving average over the last couple of weeks or so, are they enough to form a possible bow tie formation of the moving averages? At the moment I'd say no, but I would like to let this idea sit there for a couple of more weeks.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.